Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody. Today guys we will talk about the Kiwi, since on other currency pairs market has accomplished our expectations, but unfortunately has no sufficient time to show any reaction, because market just has hit the levels that we have discussed in the previous researches. So if you will take a look for example on the euro currency, you'll see market has reached this confluence support and on the daily time frame chart. But on the intraday charts, we do not see any reaction yet. So you can see market just has hit it, and what will happen here, whether market will form here some reversal pattern, or what kind of the respect will follow to this area, we do not know yet. That's why we need to wait a bit more to understand whether market has intention to turn to the upside again, or we'll see the breakout and medium-term trend will shift bearish and so on. The same situation on the Japanese yen. So market has accomplished the target of the double ripple buy on the 4-hour time frame charts a couple of days ago, but still stands tight near the resistance, near the weekly pivot resistance one. I suspect that there's a bit more action to the upside could follow, but this is not very interesting right now. That's why I offer you to speak about the Kiwi today. Because on the New Zealand dollar you'll find very interesting and clearer setup, at least in relation and the compounding, comparing to the other currency pairs. It's really most clear setup that we could find right now among other currency pairs on the forex markets. What we see, we have the butterfly. In general, guys, I suggest you to search for our recent New Zealand dollar weekly research that we have made probably somewhere in the late 2013, maybe it was in the December, I do not remember exactly, but the core of this research hasn't changed much since yet, because on the monthly time frame chart we still expect on the New Zealand dollar upward continuation and taking out of the previous highs. That was our major context, that the long-term sentiment on the New Zealand dollar is bullish. That we have discussed even 3 or 4 months ago, and long-term context is still valid. Thus, on the daily time frame chart, what we have the butterfly sell pattern. Fast action to the upside. Market has reached the 127 extension, has exceeded it, returned right back down, retested, and stands now above this level. Next target stands 1618, approximately is 8670 area. That's 1618 extension. If you will contract the chart, you'll see that is also the previous swing high. Right here you can see this is the long-term high, and the target stands very close to it. Okay. Now, so market hasn't quite reached this target and has formed this bearish engulfing pattern. But personally, guys, I do not want to rely much on this pattern because of two major reasons. First one, as I said, this is untouched the target of the butterfly, because market has exceeded the first target but not quite reached the second one. Also, guys, with this candle we have the bullish stop grabber that I prefer to trade. So I would like to trade patterns, grabbers, in a direction of the previous trend. When the market returns right back down, forms the grabber. That is my preferable type of the grabber, when it, as I said, forms in the direction. Not in the opposite direction, but in the direction of the previous trend. And the third reason, we have the nice setup for the Judd Napoli directional pattern, and I prefer to get the bread and butter buy. And this pattern already has been confirmed. So if you'll draw the MACD, 3x3, you'll see that is the close below the 3x3, hitting the 3 its support. And now market already starts action to the upside. So why this setup is interesting? By two reasons. First is because we could place the very tight stop slightly lower than this grabber low. Second, that we have the upward momentum to the upside, and even if we will become wrong and market will not show this action to the target, it will show probably at least minor reaction on this support due to the impulse that we have, the bullish impulse that we have here. Okay, it means that at least the target of the Brent bar the trade should be accomplished. So market probably will reach the 618 resistance of that move down. That will let us to move our stop to break even if occasionally market will turn to the downside and will not continue move high. So that's advantage of the current setup on the daily time frame chart on the New Zealand dollar. Now if you take a look on the hourly time frame chart, you'll see that market has formed a reversal head and shoulders pattern right at the support that we have just discussed. That's the pattern that could trigger the upward action on the New Zealand dollar. Very nicely looking pattern. You can see very harmonic. So just perfect shape in terms of the extensions, in terms of the time, where it has the perfect symmetry. You can see that's what we would like to see when we deal with the head and shoulders patterns. Well, that's why I like this setup on the New Zealand dollar. At least this is most clear setup among the other currencies, other majors that you could find right now. And it's really short term that we could trade until market will show any reaction on the Japanese yen, on the euro currency that we could use probably on the next week. So let's see what will happen. And currently, as I said, New Zealand dollar really interesting, and that setup probably could be traded even during today's trading session, even on Friday.